Ladies and gentlemen, on behalf of Captify Consulting Investor Relations team, I welcome you all to the H1 FY26 post earnings conference call of Madhusudan Masala Limited. Today on the call, from the management, we have with us Mr. Rishit Kotecha, Chairman and Managing Director, and Mr. Hiren Kotecha, Full-Time Director. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to brief us about the business and performance highlights for the period ended September 2025, the growth plan and vision for the coming year, post which we will open the floor for Q&A. Over to the management team.
Thank you, Vinayji, for briefing the introduction. Hello, good afternoon, everyone. Myself, Rishit Kotecha, Chairman and Managing Director of your company, Madhusudan Masala Limited. It is my pleasure to welcome you to the earnings call for the second quarter and the first half of the FY26. Some of you already aware about our company, but I believe today some new investor also joined in this interaction. So I'm happy to let you know about our company in brief. Our heritage, like Madhusudan Masala was founded in 1977 by my father, Mr. Daljibhai Kotecha, and his younger brother, Mr. Vijaybhai Kotecha. Their vision of quality, authenticity, and service has been carried forward by the second generation, myself and my cousin Hiren Vijaybhai Kotecha. Today, we continue to blend tradition with innovation across our product range. What we make, Double Hathi, our flagship brand for ground spices, blended spices, whole spices, and other grocery items. While Maharaja and Mantavya, which is stands for our economy segment ground spices line. While recently acquired our Vitagreen Products Private Limited, which is wholly own subsidiary of your company Madhusudan Masala, which also offers ground spices, blended spices, other grocery items, and other than this, ready-to-cook products under the brand name of Double Seven Green. I hope you all have received the presentation and financial result of H1 FY26. But let me summarize them and explain why Q2 FY26 has underperformed. Our branded product performance, our focus on premium branded offering is yielding encouraging result. In H1 FY26, our branded products sales was stood at 6,303 lakhs. This figure rose to 7,993 lakhs in H1 FY26, which representing a 27% YOY increase from the past year. So this has been very good to our effort in very good efforts in increasing our branded segment. This growth underscores our gradual strengthening of branded portfolio and the growing consumer presence for our Double Hathi, Maharaja, 77 Green, and Mantavya lines. Financial highlights on consolidated basis. As expected, Q2 FY26 shows a moderation in revenue, while our profitability improved significantly. Like EBITDA margin for the Q2 FY26 has been increased to 14.5%, which was 10.3% in Q1 FY26. And similarly, net profit has also increased to 7.7% in Q2 FY26, which was 5.7% in last quarter. The product mix between Q1 and Q2 of FY26 is different as compared to Q1 and Q2 of financial year FY25. So this due to the growing contribution of our branded business and our disciplined approach to pricing and cost management. However, we look H1 to H1 basis, we have been consistently growing with revenue by 18.7% YOY, and EBITDA has increased for 24.2% YOY, demonstrating the strength of our business fundamentals and improving margin profile. Um, all of you have a question why Q2 FY26 has been down compared with Q1 FY26. There are many reasons behind this downfall. This is our regular business cycle, which up and down in Q1 on Q2 in every year. Some of the key reasons behind this softer quarter is that carry forward inventory, like record purchase by our distributors in Q1 when spices prices were historical lows, left a sizable stock that was largely consumed in the Q2, damping fresh, which damping the fresh orders in Q2. Conservative order intake. Anticipating price rise after Diwali due to unseasonal rains and cyclone, we adopted a caution approach to accepting the order and avoiding commitment at lower prices. And other reason is straightening to shift to branded sales. Branded products now account for 71%, which was up from 65% last year. While improves gross margin, the intentional scaling back of low margin trading volume contributes to the top line moderation. Despite the lower revenue, the higher share of branded business expanded our EBITDA margin, underscoring the benefit of strategic focus. Now, outlook has been coming that channel inventory have largely been depleted, positioning us for a robust rebound in Q3 and Q4. We expect demand to driven by replenished cycle and favorable price environment post Diwali. Our continued emphasis on high margin branded products and disciplined inventory management should translate into sustainable growth and improve several results. Also, our sales cycle has been compared to H1 and H1. H1 and H2 has one third and two third in every year. So I think our H2 will be very robust in sales. In closing, I thank each of you for your continued trust and support. That concludes my remarks. I request to open the floor for question and answers. Thank you.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. If you're not able to use the option of raise hand, you can post the question in the chat box as well. We'll take the first question from the line of Resha Mehta. Resha, you can unmute and go ahead, please.
Yeah, thank you. So my question is on the sourcing. So, since we source, for example, our chili from the south,
Yes.
are we in any form, at a disadvantage in terms of pricing or something of that sort, versus, let's say, a south-based player? And do we source directly from the mandi or is it via some intermediary?
Yeah, your last question is already we have discussed in earlier meeting, but I will tell you that we are sourcing from directly from mandi, but there is a mediator like commission agent between us and mandi. So on behalf of us, our commission agent procure the material and send it to us.
And are we at a disadvantage in any form versus, let's say, a local player in south?
No, we do not have a market in South region. We are selling our products in western parts, majorly in western parts, and recently we have started northern regions. So we are not facing any competitive pricing for the base raw material areas. Like in South, majority spices are grown in South, so we are not considering our product to be sold at southern part. And strategically, we are strengthening our presence in western and northern region.
Oh, sorry, my question was not on the sales and distribution side. What I'm asking is that let's say we source our chili from AP, Telangana or Karnataka. right? So if there is a local chili spices player, in one of these states, then in terms of sourcing, do they get better pricing, or are they able to avoid these kind of commission agents or intermediaries in between, and hence their sourcing costs would be much lower versus ours? Is that a possibility?
No, I do not think this type of possibility has been arise, because same scenario also we seen in our local mandi like Jamnagar, Rajkot, Gondal, that many out-state purchasers are coming, and their commission agents are coming in these mandis, and they are getting fair pricing as we local are purchased at that prices. So similarly, in other state, when we going to procure buying the raw material, our commission agent is very familiar with the mandi and all farmers. So I do not think that we get higher price than local players in local mandi.
But does everybody go through via the commission agents, or is it possible to, like directly source from the mandi? I mean, even let's say for a big player like MDH, Everest, do they also go via commission agents, or do they source directly?
No, majority big players or any medium players like us are sourcing via commission agent only, because this commission agent, what they do, farmers are taking the raw material in small quantity. So one farmer is taking 1 or 2 tons, and other farmer taking half tons. So our commission agent combines all the material from 5 to 10 farmers, and make a lorry lorry sizable quantity for us, which we require. So commission agent generally make this on behalf of us, and taking the commission for this practice.
No, no. So thank you for that. And just my last question on the margins, right? So there is another listed spices player in the SME segment, right? So they get around 50% of their revenue from spices. But if I look at their gross margins, they are in that 30% kind of range for their spices business. Whereas, if we look at our gross margins, they are at around 18%. So, and as a result, they are like half our size. And, as a result of this, their EBITDA margins are also, in that 16-17% range, because, possibly because their gross margins are higher, right? So why is there, such a big difference in terms of, the gross margins, if, for a similar spices product, a spices player?
Yes, your question is right. But the spices has 3, 4 categories, and all categories have a different margins, EBITDA margins. And we also have a trading business. Out of our total business, we have last quarter, this quarter, we have did 71% of branded products, while 29% was a trading business, which has only margin of 4%. That's why our overall margin has been looks down to compared to other companies. While our branded products has also 4 categories like ground spices, blended spices, grocery products, and tea and ready-to-eat products. So all these categories have different margin. So overall branded product margin has been if you consider only branded products, we have a 20% of 18 to 20% of EBITDA margin.
Got it. All right. Thank you.
Thank you, Resha. We'll take the next question from the line of Nishita Shanklisha. Nishita, you can unmute and go ahead, please.
Yes, hello, am I audible?
Yeah.
Yeah, so I just wanted to understand what are our current inventory levels. You mentioned that we were like almost absorbed the inventory completely from the Q1 inventory that we were holding in October. So, what is the current inventory level?
See, Nishita, We have clarified that inventory level of our partners like distributors, super stockists, and wholesalers inventory has been almost on empty side because they were procured in quantity yeah, for the Q1 because the lowest price of historical lowest price of spices. And we insisted all of our partners that please purchase the maximum of your need for 1 or 2 quarter in the first quarter. And they also benefited from that also. So our Q2 has been moderately downside because of historical purchase in Q1, which was 7,200 lakhs, which is compared to two and a half times from the last Q1 of FY25. So our raw material stock is moderately as compared to the last year.
Okay, okay. So, matlab, if I understand correctly, we currently, hello.
I hope you I hope you questions correctly and give the answer.
Yes, yes. So just to clarify, our partners have emptied their inventory. So now you're expecting that they'll have a better purchase in Q3, right?
Yeah. Better
Okay.
purchasing in next 2 quarter, and also seasons of marriage and other seasons are coming in this the second half also. So or both this quarter two last quarter 2 quarters are going very well.
Okay, understood. And my next question is are the margin at 14% level sustainable? And are we planning to increase the product mix of our branded portfolio? And like by how much are we expecting by FY26? How much do you see the branded portfolio contributing to the revenue?
See, in FY26, our branded product portfolio remains at between 70 to 75% compared to last year 66%. And margins also been stood at between 12 to 13%.
So margins will be in the range of 12 to 13%.
Yeah.
Okay, okay, understood. And if you could give any revenue growth outlook for FY26.
Yeah, we have planned that if FY26 we will close our sales revenue at consolidated basis 300 CR, 300 to 310 CR.
Okay, okay, understood. And okay, okay, got it. Thank you so much.
Thank you, Nishida. We'll take the next question from Amit Agicha. Amit, you can unmute and go ahead, please.
Hello.
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 Yes.
Good morning. Am I audible?
Yes, good morning. Yeah, you are audible.
Yeah, thank you for the opportunity, sir. Sir, so what is the internal target timeline and framework to achieve 1% market share in the Indian spice industry?
We have targeted for 1% market share till FY30 financial year 2030. We have targeted that we achieve the 1% of market share in branded segment.
So what would be that value, sir?
If we consider it at the figures of FY24, the entire industry of spices industry was 2,60,000. So as of now, it as a 1%, it stood at 2,600 CR. But this is also growing at 10 to 12% CAGR. So in FY23, it should be reached at more than 3.5 lakhs CR.
3,500 crore, you're saying?
Yeah.
By
As per
2030.
our idea, the industry should reach at 3.5 lakhs crore. So we reach our sales at 3,500 CR.
And so what is the capacity utilization currently for both the plants, the Rajkot and Jamnagar?
Both of the plant are currently utilized more than 90%. We are also we have started a new capacity plant at between Jamnagar and Rajkot at Sonosra village, which will be which has a capacity of 6,000 metric ton in first phase, and second phase we are coming with 18 to 22,000 of metric ton capacity per annum.
And so what will the capex for that, and how will be the funding be done? Internal accruals or debt?
No, in first phase we are not getting any fund or banking debt from for this first phase. We are purely going with internal accruals.
What would be the capex amount, sir, if you could disclose?
Yeah, that is not issue. The capex would around 18 to 20 CR for first phase.
For the 6,000 MT, you're saying?
Yes.
And like, what is the expected timeline that you think so that this will be beginning?
We have taken the timeline from the we from whom we given the project that they are completed the project till March 26, but we expecting to be operative this production by first quarter of the FY27.
Okay, sir, I will fall back in the queue. Thank you, sir. Thank you.
Thank you, Amit. We'll take the next question from the line of Vijay Chauhan. Vijay, you can unmute and go ahead, please.
Yeah. Thank you for the opportunity. Can you please repeat the revenue target for the FY26 or an FY27?
We have got target for FY26 is 300 crore, and for FY27 we have targeted our revenue on consolidated base as 400 crore for FY27.
Okay, so 118 we have done in H1, so it's typically like 60-40 or 65-35 in terms of favor of H2.
Yeah.
So essentially we are communicating we will do 180 crore in the H2. So we should be doing maybe 30 odd crore on the monthly basis. Okay, if we look at the 6 months. So we have seen already 1.5 months passing into the H2. So is the
Yeah.
trend is in line because inventory also is depleted on the channel inventory side. So, or
Yes.
are you still seeing some stagnation on that part, or we are near 30 crore kind of run rate on monthly side?
Yes, definitely. We are running on more than 30 crore of per month revenue, because after Diwali, our sales have been getting very higher from our channel partners. So we are definitely sure that the year will be close more than 300 CR.
Okay. And typically in H2, what is the consumption pattern? How it is different from the H1 side because of events, what you are highlighting? If you can throw more light, like how is it different and whether we are selling more of a branded products in H2 versus H1? Because anyway, we are at 71%. So are we expecting the 71% to be sustained in H2, or we can expect the normalized level of 65%? And what is the typical pattern in terms of the consumption behavior?
In terms of consumption behavior, the pattern of H1 and H2 is typical. Like H1 is 1/3 of the entire year, and H2 is 2/3 of the entire year. So our pattern is going as per our selling cycle only. And as in Q2 FY26, we have achieved 71% for branded products, And I believe that this above 70% we can manage to take these branded products above 70% only till the FY26.
Okay. And what is the sustainable EBITDA margin we should look for the annual basis? Because right now we are at like little bit on the higher side because our
Yes.
branded has improved, and so that is good sign. But what is the normalized EBITDA margin like we should keep in mind going ahead, maybe 1, 2 year down the line or 3 years from perspective?
See, this is I can share the idea for the FY26, but it is very early to share the EBITDA margin for FY27 or FY28. But in FY26, we are considering our EBITDA margin will be stood at between 12 to 13%. Because of increasing our branded sales. This will be somewhere around 12 to 13%.
Okay, so 12 to 13% on the annualized basis, and we had done some 11.9% excluding other income. So we are expecting to stay in the same line, right?
Yes, yes.
Yeah. And what was the like the post capex capacity expansion? What will be the our total capacity?
Post expansion, our total capacity will be 12,000 metric tons. As of now, we have 4,800 at Jamnagar unit and 600 at Rajkot unit. So Rajkot unit will be shut down after operating of new facility.
Hmm.
So 6,000 metric ton will be at a new plant, and we have also expanding our existing Jamnagar facility with 1,200 metric ton expansion. So Jamnagar unit will also be capacity has been increased to 6,000 metric ton. So total capacity in Q1 FY27 will be 12,000 metric ton.
Okay, and both will be focused majorly on branded, or we can manufacture any kind of product depending on the demand side.
No, no, we are only focusing on own brand only. We
Okay.
are focused for white labeling, but we focus on our own brand only.
Okay. And last question from my side, typically on the, let's say, some event related or the wedding related consumption. So typically, do we give some discounts to our channel partners when they give us some large orders or something, or that is not the case? So it is the completely the normalized margin that we give even for the bulk orders, maybe via channel if we get. So how it is that working out?
Typically, our distributors and channel partners have a fixed margin ratio, whether they are giving small order or bulk order, the margins could be at same level. But sometimes if they are asking with that they want to buy in bulk, so we give ideas that in future if you getting the price hike benefit, then we consider them to buy in bulk. Rest we are insist them to purchase the stock as per their need only.
Okay. Okay. That was all from my side. Thank you and good luck for the future.
Thank you.
Thank you, Vijay. We'll take the next question from the line of Akshat Jain. Akshat, you can unmute and go ahead, please.
Sure. Thank you. So my first question is that for FY26, if we're thinking of 300 to 310 crores, what would be the geographic, like state-wise split for this?
See, currently we have a split of our geographically as 70% from our Gujarat state only, while 15 to 17% from Maharashtra, while rest of sales are coming from newly established northern states like UP, Jammu and Kashmir, Punjab and Chandigarh.
Okay. And the mix is likely to be the same for the full year also, right?
On the front of H2, this split will be smaller in Gujarat. Like we expecting that northern region will be more higher from 12 to 13% to 20% in this second half.
Okay. And what are the strategies that we are adopting to grow in these new markets for us, like the North market? I understand that Vita Green is fairly established there, but to penetrate them further, what are the strategies being adopted?
First of all, we are adopting a good team which has already been worked with any good spices company. So in Jammu and Kashmir, we already have a good team of 4 person who were connected in spices industry from a long period. So they were working with majority companies, well-known companies. So we hire them. So they have in relation with distributors also, and they have relation with retailers also. So first of all, we insist our team that team has more capable to introduce our product to their non-distributors and retailers. Then we uh, uh, procure the sample for the local market and provide the same finished products to the market. So our product is not getting different from the local player, and we are giving more margin from compared to well-established players like price to retailer PTR is 22% in majority big players, while we are giving 30 to 32% of PTR to retailers, and same in distributors. Generally, 7% is given by the big players, while we are giving 9% to distributors. So all of these actions are giving us a place to new regions.
Sure. Got it, got it. And similarly, I'm seeing that even in the spices mix compared to last year, our mix for ground spices has gone up. It's at 45% now, while whole spices has come down. So is that a conscious call in light of the gross margins of the categories?
Yes, definitely. And we are focusing on ground spices only because we see a huge gap in market that no big players are penetrate entire pan India market in ground spices categories. While blended spices is on hand of only 2 or 3 companies like MDH, Everest, and Badshah. But ground spices has a very huge market, and also there is a no any big players has a market in entire India. So we are focusing on this category to establish our double RC brand as a ground spices player.
Okay, so what are the kind of margins that we're making in ground spices, whole and blended?
We are making 15% of EBITDA margin in ground spices.
Sure. Okay, and how does that compare in whole spices and blended?
Blended has a 25% of EBITDA margin, while whole spices at 10%.
Sure, got it. And I was just seeing that the company has launched new products like ginger garlic paste. So
Yes.
just want to, if you can just share some light on the thought process of new products going forward.
Yes. The new products of ginger garlic paste is already being sold by Double Seven Green, but this product is sold in only a small pack of 5 rupees. So we have getting more demand for big packs. So we launched in 500 gram and 1 kg packs in jar. So these products are already in our portfolio, but the SKU we have launched in a new category. And some new products like Unjia Masala is solely a new product for our portfolio. But these masalas are season based. In winter only these masalas are selling. But the ginger garlic paste is sold entire the year throughout the year. So this bulk pack 501 kg is demanded by Horeca business. So we launched this for this Horeca business only.
Okay, sure. And lastly, in Q2, I can see that our EBITDA margins have risen from 10% to 14.5%, while a small bit of this could be on the reason कि branded sales have gone up in Q2, but are there any other factors also because it's a 4% jump in EBITDA?
The major reason is the increase in branded sales only. In the other sectors like a price hike of raw materials in recent period also reflected in the EBITDA margin. But this will be neutralized in the Q3 and Q4 because our raw material procurement is continuously buying side on at a higher price also. And but in Q2 our stock of last quarter of FY25 has been consumed in Q1 and Q2, so our margin should reflect in at higher side.
Sure. Thank you, sir.
Thank you.
Thank you, Akshay. We'll take the next question from the line of Prashant Shah. Prashant, you can unmute and go ahead, please. Prashant, you can go ahead, please, with your question. I think we'll move to the next participant. We'll take the next question from Pratik Rathi. Pratik, you can unmute and go ahead, please.
Hi, sir. You mentioned that the next phase of entire capex will be funded through internal accruals. Does that also include the pending warrant conversion?
Yes, exactly. The fund will be utilized by warrant conversion only.
Got it. So I understand the warrant conversion will be due by May or June 2026. So that will be converted before that. The
Yes,
entire.
40% conversion will be in this year before March, and the
Hmm.
rest of 40% will be in FY27. So the
Oh,
entire project will be completed by this warrant conversion.
got it. Okay, that's it. Thank you, sir.
Thank you.
Thank you, Pratik. We'll take the follow-up question from Nishita Shanklesha. Nishita, you can unmute and go ahead, please.
Yes, hello. So I just had a follow-up question on the capex plan that you have. I just wanted to understand what will be the phase two of your capex plan? How much capacity will be increased in phase two?
Yes, sure. Let's see, first phase will be completed by FY27 Q1, and capacity will be 6,000 metric ton. While the second phase will be started after the completion of this first phase. So we are planning that we will start our second phase by quarter 3 or quarter 4 of FY27. The capacity will be 18 to 22,000 metric ton per annum, which is under consideration, not yet finalized, which capacity which we are going with. So later we will disclose on the exchange exactly about all about the second phase of our
So, so
second.
in second phase, we are going to add 20,000 metric ton per annum of capacity.
Currently, we are considering this capacity, but later we can go with more capacity also if we see the market scenario and other capex related discount.
Okay. And this phase two, the construction will start in Q3, Q4, or the production will start in Q3 or Q4 FY27?
We started construction of the phase two in Q3 or Q4, Q4.
Okay, okay. Understood. And like from the phase one capacity at more than 90% utilization, what will be the peak revenue?
New capacity or at current capacity, I'm asking here.
The new capacity, the phase one capacity that we will have, which will be operational from Q1 FY27, what will be the peak revenue from that additional
Uh,
capacity?
uh, so, as a both of unit we achieved 12,000 of metric ton capacity in Q1 FY26. The maximum we can uh, go 400 and half to 500 CR between.
Okay, and when do we expect the capacity to ramp up to full utilization? Will that happen by the end of Q4 FY27 or earlier?
I think 80%, 70 to 80% capacity will be utilized by end of the FY27.
Okay, understood. Thank you so much.
Thank you, Nishita. We'll take the question from Prashant Shah. Prashant, you can unmute and go ahead, please.
Hello, am I audible?
Yes, yes, you're audible now.
Yeah. So, Rishiki, my first question was that the first caller had asked first that we buy through the commission agents through various from various mandis. So, typically, the commission is in what range?
Commission is in range of 1.5% to 3%. Depends on quality and depends on mandi.
Okay. So, I mean, with large farmers, there is a concept of contract farming. Have we explored that, or are we thinking of doing anything on that side?
Yeah, no, recently we are not thinking for the contract farming. Before 5 to 6 years, we have tried with Gujarat local farmers as a trial base, but the quality and the consistency of farmers is not expected as we want. But so we are not going with the contract farming. But our desired quality has been procured by commission agent very well since 40 years. So we do not think that we have to go with contract farming.
Okay. The next question is regarding our geographical footprint. So we are largely in Gujarat, some part of Maharashtra, and in the northern states. Any particular reason we are not branching in the southern states? Because southern states, the GDP is around 40% of India, and geographically the area is quite less. So distribution wise, it is much easier. I hope you understand what I'm trying to say. So, any particular reason why we are not going into the southern states?
Yeah, Prashant, you are asking very good question. See, whether any companies are selling spices in southern region, they have own plants in southern region only, because majority of spices are grown in southern states. So, if we are taking raw material from the south state and process in a western part, and again we send the finished good to a southern region, then there will be a logistic cost much higher than a local players. So if we are planning to capture the southern region, then we have to deploy manufacturing capacity at nearby areas of raw material sourcing areas. So that's why we are not currently planning to capture the southern market. while northern market is being emptied because there is no production of raw material of spices in northern states. So we will easily compete with the competitions, while competitors are also getting raw material from southern states, and we are also getting from southern states. So in north and western, we do not have any logistic related margin competition from our nearby competitors. That is the reason.
So going by that logic, I mean, in the near foreseeable future, we will not be we will not be expanding in the southern states, correct?
Yeah, correct, correct.
Okay. You mentioned that in this quarter, I mean, around 71% was the branded business, and 29% was the trading business, correct?
Yeah, correct.
So out of the 71% branded business, I mean, how much was bulk packaging and how much was a smaller packaging? Retail packaging, let's say 1 kg and below, how much was the percentage, and more than 1 kg, how much was the percentage of volume?
Exactly, we have not derived what we are asking for, but roughly idea I can give you that majority of our packing are sold in below 1 kg packs. It will be around 70% of packs are sold below 1 kg packs, and on an average we have a majority sale of 500 gram packs.
Okay. And the margins would be on the bulk packing and the retail packing, or the 1 kg packs and below. They would be the price PTR and PTD would be the same, or it would be different?
No, pricing ratios are similar in bulk pack and smaller packs only, because the bulk pack are maximum we are selling up to 5 kg, but some of our Horeca buyers are demanding in 10 kg also. But the pricing and PTR would be the same for the entire SKUs.
Okay. And we have around more than 500 SKUs, and we have a new line of, grocery products, instant mix, food products.
Yes.
Those are manufactured in-house, or we get it on a job work basis, do the branding and sell them?
No, ready to cook ground spices, whole spices, and other grocery products in some are manufactured in-house only. We are outsourcing three products like papad, ginger garlic paste, and hing. Three products are being outsourced and we paid at our unit.
So the non-spices would be how much, what percentage of the business?
It takes somewhere around 9.5% in Q2.
And how many SKUs out of 500?
That will be somewhere around 20 to 25.
Okay. So, purely from a management bandwidth perspective, uh, would it be beneficial to focus on the spices business only? And, or rather, you want to, because I have seen that many companies, they expand their product portfolio too large, and later on it becomes difficult to manage SKUs. There is a problem of freshness, the near expiry products, sales return, all that. So how do you feel, these grocery products, instant mix, in the coming period, do you think that this will grow into a sizable business of a vertical of say 100 crores or something?
Our primary focus is on ground spices category only, and the other categories are uh, going with our ground spices business. Similarly, our distributors are if we have distributor in one city and we have only ground spices portfolio, then this distributor has another products like ready to cook or whole spices. They are selling for another brand. So we do not want to our distributor to get another company in their distributorship out of our range. That's why we are keeping our SKUs in large size. So our distributors as well as our retailers are connected with our brand only. They do not look out for the other brand for a similar kind of these products.
Now, understood, Rishiji. What I was trying to say is, let us take spice as one vertical. So that
Ye-
includes ground spices, blended spices, whole spices. That is one vertical.
Yes, yes,
Oth-
and
uh, Other than spices, so that is grocery, instant mix, this other masalas and all that. That is other category. So
yes,
तो other than spices, जो spice के अलावा जो अलग है, क्या do you think that will be a substantial part of your business? What will be the EBITDA margin in that business? Is that is the EBITDA margin in other vertical, ये grocery, instant mix, will that
yes,
EBITDA margin be comparable to your spice business?
yes, exactly. We are getting 15% of EBITDA margin from grocery products, because these products are very high margin intensive in terms of ready to cook products has a 20% margin, while some of our products like salt and black pepper, black salt, pink salt has a smaller margin up to 10%. So on an average, we are enjoying the 15% of EBITDA margin from this grocery product category. That's why we do not want to lose this category also.
Okay, understood. And last thing, I mean, there are two questions on the funding and the accounting side. Your other expenses,
Mhm.
if we see on a quarter basis, quarter two of FY25 other expenses were uh, 2 crores, 2 crore 15 lakhs, and the sales was 70 crores. This quarter the sales is 45 crores, but the other expenses has gone up to 2 crore 40 lakhs. So on a lower sales, the other expenses have gone up. I mean, if you can share some details.
Yes, we have, hello, Kirit. I think our CFO, Mr. Kirit, will be more able to.
Okay, we will wait for Mr. Kirit. Uh, Hello.
Yes, yes. If you have any other question, then we can.
Yeah. My other question was, see, I mean, the company has issued warrants to promoters, and part of the money has been received. Part of the money is still pending. Correct?
Yes, yes.
Yes. So, is there any plan to call for the balance of the money? Because I see the debt is also going up, and interest cost is also slowly climbing up. So, any plans to call for the balance money on the warrants?
Yeah, I already mentioned in earlier question of some investor that 40% of entire warrant value will be recalled in this year till March, and balance 40% will be recalled in FY27 before July.
Okay, so the 20% has been received, 40% balance this year, and by July next year, FY27, 100% will be received. Correct?
Yes, correct.
Okay. Okay. If Mr. Kirit has come, then he can reply, or
I think he may be able to unmute. So meanwhile, we'll take the question from another participants.
hello.
Hello. Yeah. So Prasanji, I think we can wait for him to join back. I think he's not able to unmute himself.
Okay.
Meanwhile, yeah. So meanwhile, we'll just take the question from another participants now. So we'll take the next question from the line of Amish Kanani. Amish, you can unmute and go ahead, please.
Yeah. Hi, sir. Sir, couple of quick questions. In terms of EBITDA margin, sir, our presentation suggests that last year our EBITDA margin in the first half also was 11.4, which had gone down to for the full year at 10.5. So, despite, second half being heavy. So, and this year, being first half being 11.9, what gives us that comfort that, we'll be able to maintain margin at 12 plus? I remember last year there was some one-off because of the, consolidation. So is that the reason why we are hoping that this year we'll be able to maintain the margin? And what typically happens, in terms of operating leverage in the second half, sir? If you can explain that.
Yes, definitely. The first half of Q1 was very higher side, and the Q2 has some moderate, but segment-wise, branded sale has been increased compared to the Q1 FY26. So the margin has been also increased, and this trend will be continued in Q3 and Q4 also. So I'm sure that the margin will be somewhere around 12 to 13% for the entire FY26.
Then, sir, if you can remind us why in last year second half the margins were not so high, just because typically, operating leverage should result in. So was the gross margin an issue last year second half and something like that?
See, this is depends upon our procurement cycle. Last year we did our entire procurement before March, and this year the season has stretched up to May, up to 15th of May. So this year our procurement cycle was running till May of this year. So our procurement of raw material has been very long, and prices of raw material has been lowest side this year. Last year, the prices of the raw material were higher side at the season period. So this year we have procured the raw material in good quantity, means 60% of our entire
Sure.
Yes.
Sure. So you're saying we will get the benefit of procurement at a lower price.
Yes.
And the entire benefit we may not pass on, depending on the pricing for that season. Thanks, sir.
Current next quarter and current quarter, we are also procuring at a higher price also, because rest of 40% requirement of raw material will be somewhere around to be procured at the higher price only. So the margin will be stretched between 12 to 13%. That's why I'm
Sure. And sir, you said the inventory was depleted at the distributor level. Is it possible to, if you can give us some sense of how much is the inventory at our level, and how much is the typical inventory at the distributor level, and how much was, lower by in terms of either number of days or, quantum, which was, lower, which, there'll be a one-time, replenishment of that inventory by distributor in the second half. If I take 30-day average, and if I take a 300 crore, revenue, maybe 30 crore is a, kind of revenue which comes as a 1 month, 30-day inventory. So, is it something that is conceivable? What is the average inventory that, distributor keeps? How low it was in, say, second quarter because of the, seasonality that you mentioned? And what is something, if you can quantify days or, value-wise?
Ideally, our nearby distributors are stocking at 7 days weekly stock only. Like in Saurashtra region, our distributors and wholesalers are keeping 7 to 10 days stock only. But some areas like out of Saurashtra in Gujarat and Maharashtra, our distributors are keeping stock of around 1 month. And similarly, in recently started parts of northern states, we have a super stockist. So our super stockist has to keep 1.5 to 2 months stock, because super stockists have to fulfill the requirement of all distributors. Distributor have to supply to retailers. So the inventory level at the higher side at the super stockist level.
So that was depleted in the second quarter, you're saying. The super stockers may not have kept the
Yes.
same high level.
And also, some of new distributors are appointed in this quarter and last second quarter also in northern state. So this new distributor sales is also coming in this two quarter.
Sure. So is it possible to quantify the value which was lost, or what will be, quickly replenished at distributor level? Maybe 10 crore, 20 crore, 30 crore. What is the quantum that, we have missed in the second quarter and which will be recaptured in the third quarter? Any
Sorry,
rough
I
range?
didn't understand your question.
Sir, what you say, sir, what you explained is there was a low level of inventory at the distributor level.
Yes.
So when they replenish to a normalized level, because you said first quarter, we had given a lot of it because we gave them a view that, you procure as much as possible at lower price. With the way we captured the lower price, we tried and passed on the benefit to the distributor also, saying you keep as much as possible, benefiting the lower price.
Yes.
But that didn't happen in the second quarter, right?
Yes.
So I was saying, what was the approximate value in terms of, something that in the second quarter we lost because of the destocking? Some sense if you can give. Maybe it's difficult. So and so then last question from my side, sir. This unseasonal rain, sir, is it affecting us and in any way affecting our logistics and storage thing, and or it's not something to worry about, sir? Is seasonality, unseasonal rain can affect our third quarter or fourth quarter?
No, in our storage capacity, these atmospheric regions are not being affected because we have own cold storage to store our raw materials. So we do not have any difficulties to this storage material. But farmers are getting the very loss from the unseasoned rain and cyclone in the southern part of some areas. So this could result in high price of the raw materials.
Okay. So, but there will not be issue in quantum, right? The quantum is.
There is no issue for our storage material. We have very good cold storage facility, which will be able to face the cyclone and any other atmospheric conditions in any conditions.
Yes, sir. Pricing, how is it? Is it possible to give us some sense of pricing trend? I know we have too many raw materials, but maybe some red chili or some couple of key raw materials where how the prices have moved have they moved up by for some 5-10%, say in the third quarter because of this phenomenon? Which on our
material is chili, so we are considering chili prices rational for the entire our raw material. So the chili price went from 50 to 80% grown against the season of this current year. For example, if we bought a chili on the March or mid of April of this year at a price of 100 rupees, and then there's the same quality chili is selling at a price of 180 to 190 or 200 rupees per kg.
Oh, that's interesting. So we'll at least benefit from on our raw material inventory.
Yes, definitely. We are passing to our channel partners also when because this price is not grown 100 to 200 over the night. It has been gradually upcoming. Like one day it up by 5 rupees, second day is up by 7 rupees. So when one time is up by 5%, we give our distributor as its older price. So he also get the price benefit to the retailers and for themselves also.
Sure, I got it. Thanks a lot, sir, and all the best.
Thank you, Amish. We'll take the next question from the line of Sheikh Mujib Ahmed. Mr. Mujib, you can unmute and go ahead, please.
Hello.
Yes.
Yes, Ahmedji, yes.
Just a minute. Just a minute. Hello. Can you hear me? Hello.
Yes, we can hear you.
Yeah. Sir, just I would like to understand this chili prices fluctuation. We noted that in the second quarter and the final quarter of the financial year 25 also, our volumes were okay, but prices came down. And this year also in the first two quarters, the prices were a little bit low. So usually in such cases, that means now the unseasonal rains, how it has impacted the chili prices? That means in the upcoming quarters, will it be having the impact on the crop or how it will be?
Yes, definitely the chili crop in Karnataka and Andhra Pradesh is more affected because of unseasonal rain and cyclone also being in some part of Karnataka. So the Karnataka is a good quality chili produce state, like Dabbi Mirch and Kashmiri Mirch are coming from Karnataka state, and Guntur chili are also in terms of spiciness. So in this both of this region there is unseasoned rain. So we are thinking that coming quarter one and quarter three and quarter four will price will be on higher side only. And recently we are updating our price list on every week, and the price would be on upper side only.
Okay. But this much fluctuation in the prices, is it very common in the chilies, or is it something abnormal we are seeing in last 1 year?
No, this is not common. From after many years, this type of scenario has been seen by farmers, because this is the crop season, and farmers are cropping the raw material and taking to the in mandi. But at the time of cropping, the rain has been arrived and cyclone also been there. This is a uncertain situation. We do not we didn't see this scenario from past many years.
Okay. Sir, and the final question is, can you please again give the clarity on the capacity what we are having as on today, and what we are doing now to increase the capacity, and after the expansion, how much it will be?
I already answered this, but I will tell you that we have a current capacity of 5,400 metric ton in 2 units, and we are expanding our capacity by 6,000 metric ton in new facility, and 1,200 metric ton at our existing Jamnagar capacity. So the new capacity will be 12,000 metric ton by quarter one of the FY27.
Okay. That means it means almost you are more than doubling your existing capacity.
Yes, our capacity will be double from the current period.
So in the similar fashion, are we strengthening our distribution network? Are they ready to take this much capacity?
Yes, exactly. Currently, our capacity is under. We are utilizing above 90%, but the 30 to 40% of raw material we are we are getting outsourced at SFG level. Like in quarter 2, we manufactured 1120 metric ton of quantity, but out of this 1100 metric ton, 328 metric ton was outsourced. So this 93% was only 60 to 70% was manufactured at our unit because of our capacity constraint. We got outsourced our SFG at other spices or other millers.
Okay, sir. Thank you very much for
That's why
clarifying.
we want to double our capacity.
Okay, sir. Thank you very much for clarifying.
Thank you.
Thank you. We'll take one last question from the line of Nikhil Kumar. Nikhil, you can unmute and go ahead, please.
Yeah, good afternoon, Rishit Bhai, and thank you for taking all the questions and for great set of numbers. Many congratulations. Just one quick question I had. This
Yes.
was more in terms of like you have 4 brands, Double Hathi, Maharaja, Mantavya, and 77.
Yes.
And many of them have overlapping products, like ground spices or at times blending spices. What is the reason to have so many different brands?
See, each brand has categorized in pricing. Like Double Hathi is a premium product, while Maharaja is a sub-economy product, and Mantavya is a very lower price economy product. And 77 has a entire different market from our Madhusudan brands. 77 is a brand of vitamin products. So 77 has separate distributors and separate sales team, while Double Hathi, Maharaj and Mantavya separate distributor and separate sales team. So three brands are in Madhusudan, Double Hathi, Maharaj and Mantavya that are categorized as a pricing perspective.
Okay, sorry, I missed the last part. 77 is, how is that different?
77 is a totally different brand. Like we have a distributors in, for example, if we have in Baroda, we have distributor for 77, and we have distributor for Double Hathi brand also. So these two products are selling at a different distributors and with different retailers.
Okay, fine. Thank you.
Thank you, Nikhil. Kirit sir, are you able to unmute yourself? There was one question from Prashant Shah. I think there is some issue in the system front. I think we'll take one last question from Mr. Akshat Jain.
Yeah. Hi, sir. So I just wanted to check that for the current 6,000 metric ton expansion, how much capex have we put for it?
We are putting 18 crore of capex in these 6,000 metric ton.
Okay, so 18 crore capex is only for phase 1.
Yes.
Okay, and how much revenue potential does this translate to?
After this 12,000 total capacity of 12,000 metric ton, the peak utilization will be 400 and up to 500 CR. We can get just maximum of up to this number of demand.
Okay, and under phase 2 of the expansion, we're further adding around 12,000 metric tons further, right?
Yet not decided, but currently we are planning to expand the second phase with 18 to 22,000 metric ton, somewhere around between this.
Okay. And phase one will go live in Q1 of next year, right?
Yes.
Okay. Okay. Sir, have we thought about MP as a state because it's close to Gujarat and Maharashtra, which are our strongholds, sits in that Hindi belt for us.
Yes, we yet not plan to coming in MP. Currently, we are focusing in northern states because we have a good sales channels and sales partner in this region, which were connected to Vitagreen since long period. So we are focusing on these existing areas which we have good demand of our 77 brand only. So we are focusing in these four states as of now. And recently we have started super stockist at Rajasthan, but we have not deployed a sales team to this region. So gradually sales are coming from Rajasthan also. In Jaipur we have appointed a super stockist and which super stockist have 22 distributors under them. So we started Rajasthan also, but we have not yet deployed a sales team in Rajasthan.
Okay. Okay. And you mentioned that in Saurashtra, dealers hold 7 to 10 days of inventory. Just wanted to confirm if that's a normal case or in Q2 when the inventory was lesser.
No. This was considered in Q2 only. Because in regular terms they are taking 30 days of inventory.
Got it. So straight away, because uh, instead of 4 weeks inventory, they were holding just 1 week, and that's resulted in the sales dip. Got it.
Yes.
Okay. Sure, sir. Thank you so much.
Thank you, Akshat. So, Mr. Kirit, you're there?
Yes.
Yeah,
Hello.
Mr. Prashant, you can ask your last question that was regarding the balance sheet. You can go ahead, please.
Yeah, am I audible?
Yes,
Yes.
sir.
Yeah. So quarter two FY25, the sales was around 70 crores and the other expenses were around 2 crore 15 lakhs. In quarter two FY26, which is the current quarter, the sales are around 45-46 CR, but the other expenses are 2 crore 30 lakhs or somewhere around that. So even though the sales have gone down, the other expenses have slightly gone up. What would be the reasons? And if you
Q1 के लिए बोल रहे हैं कि Q2 के लिए
Q2 दूसरा क्वार्टर
दूसरा क्वार्टर सर
Kirit,
फर्स्ट क्वार्टर में इस एडवर्टाइजमेंट एक्सपेंस आर अदर एक्सपेंस हेलो
प्रशांत जी ऐसा बोल रहे हैं कि क्वार्टर वन में हमने 73 CR का रेवेन्यू किया था उसके
नहीं
सामने
नहीं निखिल जी नहीं पिछले साल सेकंड क्वार्टर पिछला साल सेकंड क्वार्टर
यस हाँ लास्ट ईयर सेकंड क्वार्टर में हमने जो रेवेन्यू किया था 72 CR आसपास का तो उसमें हमारा अदर एक्सपेंसेस जो था वो करीबन 300 CR आसपास का था 300
ना
लेख
2 करोड़ 15 लाख
हाँ 2 करोड़ 15 लाख का था और इस साल हमने 45 करोड़ का रेवेन्यू किया है और उसके सामने 2 करोड़ 40 लाख का अदर एक्सपेंस हुआ है तो वो अदर एक्सपेंस ज्यादा हुआ है और सेल्स कम हुआ है तो अदर एक्सपेंस में क्या इस क्वार्टर में हुआ है
सर उसमें एडवर्टाइजमेंट का एक्सपेंस है अदर एक्सपेंस में
मतलब
मतलब वो किरीट जो मंत्रा एड्स का जो था
एडवर्टाइजमेंट जो बैनर वगैरह लगाते हैं ना वही
that is the reason we have made a 1.25 CR of advertisement in season period, which was from March to May, and the agency build as entire build as coming in this quarter two. That's why these other expenses are reflecting higher side from the last year.
ऋषित भाई ऐसा नॉर्मली होगा नहीं, क्योंकि क्या होगा कि क्वार्टर एंड पे प्रोविजन
हाँ।
लेते हैं, तो क्या मतलब ऐसा था कि फर्स्ट क्वार्टर में हमने प्रोविजन नहीं लिया और सेकंड क्वार्टर में पूरा का पूरा खर्चा दिखा दिया है, वैसा किया है, वैसा हुआ है क्या?
नहीं नहीं सर, वो जो लास्ट में लगाता है ना, या जो एंड में,
हाँ
मार्च एंड में जो होता है एक्सपेंस, उसका बिल
हाँ
जनरेट होता है अप्रैल में सर, ऐसा है।
तो
एडवर्टाइजमेंट का जो बिल होता है वो लास्ट में होता है। एजेंसी जो बिल इन्वेस्ट करता है वो लास्ट में करता है, जो भी लग पूरा एडवर्टाइजमेंट हो जाए पूरा तब।
हाँ हाँ
सर जैसे मार्च अप्रैल और मई 3 महीने हमने कैंपेन चलाया था, तो 3 महीने
हाँ
का मेरा बजट था 1.25 करोड़ का। तो
हाँ
उसका
हाँ
जैसे मार्च का मेरा कैंपेन खत्म हुआ तो उसका बिल रेज हुआ अप्रैल में, अप्रैल वाला हुआ मई में, और मई वाला हुआ जून में। तो ऑलमोस्ट 14 CR से ऊपर का मेरा जो बिलिंग है वो क्वार्टर 2 में आया, जो कि एडवर्टाइजमेंट हुई थी क्वार्टर 1 में। तो एक 40 lakhs वो हो गया। और लास्ट ईयर हमने जो भी हमारी कैंपेन की थी उसका एजेंसी कोई अलग थी, तो उनका पेमेंट मेरा एक साथ ही हो गया था क्वार्टर 1 में।
ओके। Still I am not convinced, but Rishit bhai, I will reach out separately with your, if possible, with you on your team to understand it better.
Definitely,
Because
definitely. You can contact Kamlesh ji from 55. He will meet us. So any of your questions we will definitely clear out on you. And because this is a half yearly result, there is a no notes on this. That's why you have to ask us. So definitely me and Kirit bhai will answer you all the questions. And Kamlesh ji, please arrange a separate call for Prashant ji.
Yeah, sure, sir.
okay, okay. Thank you, Rishit ji.
Yeah.
Thank you. So that was the last question for the day. Rishi sir, would you like to give any closing comment before we end this conference call?
Thank you all investor, and thank you for attending this interaction, and hear me very well, and all of your questions. That's my pleasure to give you as per my knowledge. Hope you have understanding correctly, and wish you all the best for our journey. And I wish you all are supporting us in our growing journey. Thank you.
Thank you. Thank you to the management team for giving us the time. Thank you to all the participants for joining us on the call. This brings us to the end of today's conference call. You may all disconnect now. Thank you.